In this video, we're going to talk about breakouts. Now, I've mentioned before in other videos that we don't really like trading breakouts as such. We prefer trading in trending environments when the markets are moving harmonically. However, the markets don't always do that, and we thought that it would be a good idea to put together a video just to show you how you can trade through consolidation, because I know that many of you will probably be interested in that. Now, as you're probably aware, the market does not always move harmonically, and that's the reason that we're putting this particular video together. Yes, we prefer trading in trending environments when the market is moving up nicely, pulling back nicely as well, then giving us opportunities to get involved in the trending moves when the trends are taking place. However, sometimes the markets decide to consolidate. Now, this can either be at the top of a particular move or at the bottom of move. It could also be at the end of a pullback. So once we've had a massive momentum move, let's say to the upside during the pullback, as opposed to giving us like an immediate entry at the end of that pullback, it may decide to consolidate. And then obviously you can have these moves in the middle of completely range bound markets where there is no trend in place at all. So ultimately with breakouts, you have a few options available to you. You can trade with the trend, or you can trade against the trend. Now, us, as you know, we're trend traders or we're swing traders, so we prefer to always trade in the direction of the trend no matter what happens. So even after a period of consolidation, we'd still prefer to trade in the direction of the dominant trend as opposed to trading against it. But we're going to give you all of the options anyway, because at the end of the day, you as a trader need to decide on what's best for you. We're going to give you all of the tools and all of the systems, but then you still need to be able to make your own decisions and put together the system that makes sense to you as a person. So for the entries for the breakouts, we've kind of got two options here. You can either trade on the initial break through the high or the low of the range, or you can decide to trade once the range has been broken and then you get a pullback. So for us personally, because we are, as I've said a number of times on this video already, we're trend traders. We prefer to trade in the direction of the trend. We like to trade when there's momentum in the market. What we like to do is to kind of filter out the false breakouts. We enter once price is broken through the level, but then once it proves itself to us by pulling back to a support or a resistance level and holding on that support or resistance level. And I'll show you exactly what we mean by that in a moment. Another good tool to use when you're trading breakouts to kind of get around the false breakouts is momentum. Okay, because you will get a lot of false breakouts. It's inevitable. It's what happens because, you know, the professional traders know that there will be traders trying to trade the breakouts, and what they do is they kind of lull them into a false sense of security. So they let the market trickle up to the breakout point. They let the price break through the breakout point, and then they smash the price back down into the range. And that's why it's important to kind of read the momentum leading up to the breakout. If there isn't much momentum there and price is sort of like trickling up to that point and then trickling through that point, that's the first indication that you're probably going to get a false breakout. Whereas if the price smashes through the breakout point and then goes further and further and further with momentum, then you're kind of like, you've got confidence that yes, the breakout is on. However, if that then happens, you then miss the opportunity to enter on the pullback, so on the confirmed breakout. But don't worry about that. I'm going to show you a few techniques on how you can actually maximize the potential for both ways of taking the breakout. So taking the momentum through, but also waiting for that little bit of extra confirmation. The other thing to remember is that there are two ways that you can place your stops here. So obviously we've been showing you guys that we want to place the stop behind the swing points, you know, the structure, all of that kind of good stuff. So obviously that's one option that's available to you. But the other option is to also place a stop the other side of the breakout zone, the consolidation zone. And again, I'll show you exactly what we mean by that in a few minutes when we get into the live charts. So this image here is just to illustrate the two types of breakouts that we can have, or the two ways that we can trade a breakout. Okay, now what we're doing here is we're assuming that we're looking at consolidation period in the middle of a trend, because that's primarily the only way that we're going to trade it anyway. So you can see that going into both of the breakout zones, you've got momentum move. You've got a nice momentum move showing that the market's got some direction. Then the market starts to go sideways. So it doesn't just pull back harmonically. It attempts to make a higher high, but then it doesn't. It pulls back a little bit. And you've got sort of like a bit of an ugly price structure there. Okay, and that's what it is. That's what a consolidation zone is. It's not harmonic price action that's swinging nicely in the direction of the trend. It's an extended period of price consolidation, of price acceptance. So the rest of the market is saying, okay, you know what? At the moment, this is fair value for the price, and the bulls and the bears can't really decide which one's going to win. Okay, so what you do is you bracket the breakout zone. So you bracket the high and the low of the zone. All right, and then you decide on your entry, and ultimately that for us is going to be in the direction of the trend. So we would say that we're going to enter in the direction of the trend when price makes a new high. So when price breaks out of this zone to the upside. As I said earlier in the video, it's not saying that you can't take it to the downside, you can't take it counter trend. Of course you can. It's just we personally prefer trading in the direction of the trend. All right, so the first example there for you on the screen is a breakout where we aren't waiting for any confirmation. We're literally just going to take the break from the high. Now you can either wait for, you know, a candle close, or you can take the immediate breakout. But ultimately what you're doing is you're not waiting for price to pull back and prove itself on the level of the resistance level. So previous level of resistance, you'd allow it to become support. You're not allowing it to do that. Now the benefits of this is that you're going to get the majority of the move. Okay, you're not going to miss any of the breakouts because you're there to take it as soon as it breaks out to the upside. However, that also is going to come with a lower strike rate, because that means that you're going to get into a lot of false breakouts. All right, and the only way you can really guard against that if you're trading this particular method is to look for momentum. So only take the breakouts where there's a great deal of momentum there. But even then, you're still going to be putting yourself in danger of taking the false breakouts. What we prefer to do is take the breakouts once you've got a confirmed level. So we would let price break out from the level, and then we would want to see price find support on that level. So the price breaks out from the resistance level. Okay, and then it comes back and it finds support on that particular level. If it can find support on that level and not break back into the range, and then make another attempt to trade in the direction of the trend, that's a very, very strong signal to us. That's a very strong opportunity, and one that we would like to take. Okay, does that make sense? So we've got two types of breakouts you can take. One is the immediate breakout. Okay, so as soon as the high is taken out, you're into that market. The problem with that is that you're going to take a lot more false breakouts, so your strike rate's going to go down. However, you won't miss any of the moves. The second is to take the breakout and take the breakout once you've got confirmation. So you allow the price to break out, then you let it come back to the level that it broke out from, and you see that that level holds. Once that level holds, then you get into the trade using the techniques that we've shown you here. So things like 1, 2, 3 reversal patterns, candlestick reversals, all of that kind of good stuff. You'd use one of those techniques to get into the trade once price proves that the particular level is holding. And that's actually a very, very strong way to trade. Yes, you're not going to get as many opportunities. Yes, you're going to leave some opportunities on the table, but you know what? You're going to get a higher strike rate, and I guarantee you, if you've got a higher strike rate, you're going to have more confidence in the system, and you're going to be able to trade it better. Okay? Now, stop placement, as I said, there's two ways that you can place your stop. One is to place your stop on the other side of the breakout zone. And a lot of people like to do this because they say, well, it might break back into the zone, but once it's proved that or once it's shown or indicated rather that it wants to break out to one side, more often than not, it will continue in that direction, even if it does break back down into the zone. However, that means you are going to have quite a wide stop loss, which also means that you won't be able to take as large a position size. The other way is to place it behind the most recent swing point. So using our example where we use the resistance level as, previous resistance becomes support. So we use that as a key level for us. We would then place the stop the other side of that level. So the other side of the swing, which means that we can take a smaller stop, which will then mean that we have a larger position size. However, again, swings and roundabouts. If you've got a smaller stop, you're more likely to get stopped out more often than you would if you had a larger stop. But again, this is something that you need to decide as a trader. You need to decide what's best for you. We can't tell you what's best for you. We can't tell you what you'll feel comfortable with. What we're doing here is we're giving you all of the tools and all of the options, and then you need to make the decision for yourself as to what will make most sense. So let's look at a live chart example. Now what I've done here is we've got two charts. They're both from the same breakout zone. But what I'm showing you is how that you can trade them differently. So the first, you would be trading literally when the high has been taken out. So going into this chart here, you can see that the market is consolidating. We've had a momentum move to the upside. The market is consolidating. It's moving sideways. It's not making new highs, but then again, it's not making new lows. This is actually quite a harmonic breakout zone. It's not a bad one to trade at all. With this one here, you would be looking, if you're just trading this chart, which is the 4-hour chart, you can see that there's no pullback to this support level. So we couldn't get the confirmation on this particular chart here. So you would want to be trading this, or you'd want to be trading, that's not really, you decide the way you're going to trade it before, right? What I'm trying to say here is that with this particular chart, you would have to trade it taking an initial breakout. So you wouldn't be able to wait for confirmation. What we were talking about, the second option, is that we like to see price pull back to the level, hold on the level, and then trade in the direction of the trend. Okay, but as I said, you will then miss opportunities like this, because you will get ones like this where it just breaks out, doesn't look back. So there isn't an opportunity to get in there when the price comes back in, test this level. However, what can you do? So what's the other alternative? First of all, you have to break in. There's a lot of momentum here, so you're happy to take it. So you're happy to take it on a break of the highs. However, if you wanted a little bit more confirmation, but you're not happy waiting for the pullback because you know that sometimes the pullback never occurs, the other option is to jump down to a lower time frame. So going from this 240-minute chart, the 4-hour chart, we can then go to the 1-hour chart, and you can see that exact same level there. This is the breakout zone, that the market does actually find support on that level. So it breaks out from the level, then it holds above the level. All right, so the way that we would trade this is that we would wait for the breakout of that 240-minute chart. We would then be eyeing up the 1-hour chart to see if we can get some sort of a pullback on that chart, and then trade that. So what we would actually be doing is trading the high of this particular zone here, of these candles here. So once the market broke out of this level, the market then held above that level. Once the market then made the attempt to break above this level here, that would be confirmation for us that the market intends to continue going up. And if it intends to keep going up, we want to be involved in that trade. So that's how you can you can get the best of both worlds. So you look for the breakout zone on a longer term chart, but then you can jump down to a shorter term chart to look for the confirmation if you're not comfortable just trading the initial breakout, which, as I said, we personally aren't comfortable doing that. We'd much prefer to trade something like this once we've got a little bit more confirmation. Okay, so I hope you enjoyed that video. If you have any questions, as always, please feel free to drop us an email, write it up in the forum, or write it below the video, and we will endeavor to answer it as soon as possible. I hope you enjoyed the video, and I'll speak to you on the next one. Take care.